Namaskaram. So now we are talking about speculation business. Why the discussion of speculation business is important? Because of this, in set off and carry forward chapter, okay, in set off and carry forward chapter, which is from section 70 to section 80. Section 70 to section 80, set off and carry forward chapter. You people are going to learn one thing for sure, and some of that things you should know at beginning itself. One aspect is this: short-term capital gain, short-term capital loss can be set off only against, okay, short-term capital loss can be set off only against short-term capital gain or long-term capital gain. Please understand, short-term capital gain or long-term capital gain, but not against any other income, okay, only in this. Second law is this: long-term capital loss can be set off only against, okay. Now look at this: long-term capital loss can be set off only against long-term capital gain, not even short-term capital gain. So this is the only possibility, and for so far as capital losses are concerned, okay, there is no other possibility under set off and carry forward chapter. So this law we will understand more in capital gain chapter, but here I wanted to correlate this with PGBP. Here you can understand long-term capital loss can be set off only against long-term capital gain, but short-term capital loss can be set off against short-term as well as long-term. So this is what you need to understand here. Speculative business loss, okay, speculative business loss can be set off only against speculative business income. Speculative business loss can be set off only against speculative business income, and that means normal business loss, okay, normal business loss can be set off against, okay, normal business income as well as speculative business income. This is not written in chapter, but this is what you should understand, because the condition is only on speculative business income. The speculative business loss can be set off only on speculative business income. There is no condition on normal business loss. Therefore, normal business loss can be set off against normal business income as well as speculative business income. Now, carry forward a provision of normal business loss is this: you can carry forward this loss for 8 assessment years. For 8 assessment years, if you are not able to set off in a current year, whereas speculative business loss can be carried for 4 assessment year only, okay. Now this is 8 assessment year and this is 4 assessment year. Because set off and carry forward provisions so far as business loss, speculative business loss are different, therefore you need to understand what exactly it means by speculation business. Now speculation business means, very simple term you need to understand for intermediate level, is that you do this particular transaction not to have those goods but to get benefit of those goods. So if you know that onions are going to get good prices in future, right now onions are having selling price of 30 rupees, in future it is going to become 40 or 50 rupees. So I say you are bullish on onions, okay. So if you are bullish on onions, what should you do today? You should purchase onions today so that you can sell it after 10 days, after 15 days, after 20 days, after 1 month. So what will you do ideally is this: instead of purchasing onions, you will purchase contract of onion. That those contracts are available on multi-commodity exchange, MCX and MCDX. MCX and MCDX, these are the transaction market. And it can happen on like outside the market also. It can happen between 2 persons. So if you are my friend, okay, we can sit together and say, I'm ready to purchase onion at 30 rupees and in future it will become 40 or 50 rupees. This is my understanding. What do you think? So you are bullish about onions. You are thinking that no, right now onions are trading at 30 rupees. In future it will be traded at 25 rupees. So you are bearish on onions. So one bullish and another bearish, these 2 persons comes together, they agree for particular terms. Now future is completely uncertain. Either your understanding will win or my understanding will win. Whoever wins will get the profit in his account, and whoever lose will have loss in his account. So the person who is losing will pay money, person who is winning will get money. So I am not going to give you 30 rupees now. Tomorrow if the price becomes 32 rupees, so I won, you have to give me only 2 rupees per kg. Please understand, this happens only on net of transaction. The transaction payment happens only by netting. Okay, whereas in normal trading market, what happens, if you wanted to really have onion trading business, you have to go to the market, purchase onion for 30 rupees per kg, hold it with you, and then customer will come, then you have to sell it for 32 rupees, and 32 rupees sell, 30 rupees your purchase price, other expenses you will subtract, and then you will determine your profit. This is normal business. Here what do? We just sign contract at 30 rupees and tomorrow we will cancel contract at 32 rupees. I will just get 2 rupees in my account. By paying some margin money in this contract, we can trade in this type of contracts, which are also called as derivative contracts or FNO contract, future and options contract. So there are various names given to this speculative business in market. So look at this explanation 2. Explanation 2 to section 28 specifically provide that where assessee carries on speculative business, that business of assessee must be deemed as distinct. Okay, we should assume this is the separate business and its books of account has to maintain separately because of set off and carry forward provisions, and separate from any other business. This become necessary because of section 73 provide that losses in a speculative business, unlike other business loss, cannot be set off against the profit of any business other than speculative business. Therefore, I told you in beginning only, speculative business loss can be set off only against speculative business income. Likewise, loss in speculative business carried forward to subsequent years, which is maximum 4 years, okay, can be set off only against profit of any speculative business in subsequent year. Profit or loss resulting from speculative transaction must therefore be treated as a separate and distinct from profit and gains of a business or profession of any other business. This is the logic why speculative business has to be accounted separately. Now, what is the meaning of, see, there is no definition of speculative business in PGBP, but there is a definition given for speculative transaction. So we assume person who does speculative transaction is into speculative business. Okay, so what do you mean by speculative transaction? Speculative transaction means a transaction in which a contract, so this word is very important, contract, we don't buy commodity, we just buy contract. A contract for the purchase or sale of a commodity including stock and shares is periodically or ultimately settled. So you will settle the price, you will settle only profit and loss component, otherwise than by actual delivery or transfer of the commodity or scrip. So you are not concerned with actual delivery, you don't want actual delivery, you are just doing purchase contract and sale contract. In capital market we call it long contract and short contract, okay, and you are just trying to earn profit from that particular transaction. Therefore you are called as a speculator in the market, where any part of the business of the company consists in purchase and sale of the shares other than company, okay, of other companies. Such company shall be deemed to be carrying on speculative business to the extent which business consists purchase and sale of such shares. So obviously, if you are just doing a speculative transaction, only those activities will be called under speculative transaction even for company. However, this provision is not applicable in following companies. So some exception is given to certain companies. First, company is not under the head PGBP. Its income is not getting taxable under the head PGBP. So its income is taxable either under income from securities, income from house property, income from capital gain, and income from other sources. That means they don't even have PGBP, other PGBP income. And secondly, company whose principal business, that means they are investment companies. In accounts, you call these companies as investment companies or mutual funds. Investment companies or mutual fund. Their business is trading in shares, their business is the banking in nature, their business is granting loans and advances. So this is NBFCs, okay, NBFCs. So These are the certain companies which are excluded. What it means, accordingly, these companies carry on the purchase and sale of the shares of other companies. They would not be deemed to be carrying on speculative business. This is their business to purchase shares and sell shares of other companies. This is their core activity. You cannot call that they are doing speculative transaction. This is their ordinary business. This is the purpose for which they were created under the law. Okay. Transaction not deemed to be speculative transaction. Now, so far as intermediate examinations are concerned, you just need to remember the headings, and that too for multiple choice question. Final students, yes, you need to have a detailed understanding about it, because you understand hedging and forward contracts and future contracts. So certain transaction, I am just going to read headings. Hedging contract in respect of raw material and mercantiles. So what is hedging? Hedging means if you are purchasing some forex goods or goods in foreign currency, so just to protect yourself from a future unexpected losses, people enter into hedging contract. Now, people who enter into hedging contract, they are not speculator in the market. They came to protect themselves from variation that happens unexpectedly in market. So if I am a contractor and I am not certain about cement prices, what will be there in future, and I have to execute a contract in period of 3 years, so better I should take future contracts of cement on a today's market price if somebody is ready to sell those particular prices, just to hedge fluctuation, just to hedge myself against the fluctuation we takes in the market. So hedging contract, same hedging contract in respect of stock and shares, forward contracts, future contracts in derivative. This is FNO segment, future and option segment of the share market. So these are not deemed to be speculative transaction. These are the normal business transaction that you need to understand. And trading in commodity derivatives, trading in stock derivatives and trading in commodity derivatives. Okay. So this is the overall understanding about your speculative business and relevance of speculative business. As I told you in the beginning, you need to remember this. Speculative business loss can be set off only against speculative business income and can be carried forward for maximum period of 4 years, whereas normal business loss can be set off against normal business income as well as speculative business income, because there is no condition and limitation we have imposed the way we had imposed it on speculative business income. Yeah, thank you friends.